right. Well, good morning or good afternoon, everyone, wherever you are logging in from. My name is Dan Kimball. I am a product specialist here at Aplos. I have a background in fundraising. I spent about 23 years in the fundraising space, working for a number of nonprofits here in Central California, where Aplos is located. Again, topic is to talk not only about some of the roles and responsibilities of those nonprofit board members, but what are the different approaches to financial oversight? Because we all know that at the end of the day, we should know that probably one of the most important things boards need to do is to not only manage the finances of the nonprofit organization, but also to understand them. And that's the piece that I really kind of want to dive into a little bit today. It's not just that so many boards, you have the finance committee, or you have a CPA on your board, or an accountant on your board, and that person seems to always take the brunt of understanding and interpreting those finances. And I'm proposing that as board members, all your board members should have a basic understanding of some of those key components of the finances of your nonprofit, church, or ministry. And we do have a lot of churches that join us, so that's why I incorporate that in there. So 3 things I kind of hopefully some takeaways is what are some typical financial responsibilities and misunderstandings of board members, some fundamental fiduciary duties that your board should have, and then I'm going to, at the end, spend a little time just talking about how to read, interpret, and understand some reports, and I'm going to show you some samples. So that's kind of what we're going to do here. So maybe maybe you yourself might identify with a couple of these little drawings or cartoons that I have pulled up for you. I think these can definitely. I have been in these situations. I like the first one. We called this meeting to discuss critical issues. So let's spend our time discussing something completely unrelated. Maybe that's a board situation you can relate to, or the one on the right. We're in good shape. Nobody understands our financial statement. And this one comes to me from a personal experience that I have. I am on a local board here in where Aplos is located in Central California. And I will tell you right now that about 85% of that board easily does not understand our finances. When the financial statement gets passed around, first of all, it's very complex to read and understand, and even though what we do isn't that hard. And I'm often amazed at how many people really don't understand. And when they ask questions, a lot of times the person that is reading that financial statement will say, well, don't worry about it. It's just the way that this report is laid out. And we move on. And I'm blown away by that approach. And so So the next kind of couple cartoons is again, maybe you have a board or been on a part of a board that's had this experience. Let's talk about money. Do we have any? How much would we like? Does anyone know where we can get some? So just kind of a little light introduction into board responsibilities and finances. So before we get into the financial part, let's talk a little bit about how nonprofits are different. And the reason why I think this is an important kind of point to dive into is that many times as board members, we have people that come from the business sector, which is absolutely great. It's critical. And the first thing they want to know is why can't we run the nonprofit just like a business? And I really do think that nonprofits are different. They're different not only, obviously in that they are a 501c3, there's a tax structure that's different, but they're also different in how they organize and manage some of their finances. A nonprofit is an organization that uses surplus revenues to achieve its goals rather than distributing them as profits or dividends. In other words, profit and loss is what business do, whereas nonprofits are trying to enhance their mission, further their mission. Now, profits are key because obviously if you're profitable as a nonprofit, you can then reinvest into that mission or the work that you're doing. But I think it's important that people understand that when looking at nonprofits, not only are the financial statements going to be a little bit different, but the overall approach of what you're doing can be a little different as well. So that's kind of something in there. And again, if you want to use the question and answer box, just feel free to do that, and I'll pause every once in a while and we'll take a look at that. Just some sort of kind of overview basics for board members. If you've not ever seen this, this is kind of a kind of a classic board source, which is an excellent resource. It's called Board Source. You can Google them. They have a lot of resources. This sort of idea of the 3Ds has been around for a long time, where the board acts as trustees of the organization's assets and assures that the nonprofit is well managed and remains fiscally sound. But the board must exercise proper oversight of the organization's operations so that they can maintain that legal and ethical accountability. And so a number of years ago, there was a series of articles were written and kind of reproduced. Board Source did a really good job recapping these, and they called these the 3Ds. And at the end of the day, this is kind of what the overarching three major responsibilities of any board member should be. The first is what they call duty of care. That's the first D. Duty of cares is where board members are expected to actively participate in the organizational planning and decision making and make sound and informed judgments. That's that care. That's that stewardship. That's that responsibility that you're not just on the board so you can update your LinkedIn profile or that you can brag that you're on 5 boards, but that you're actually there and you're participating and you're caring for that mission of that organization. A duty of loyalty, that's the second D, which is when you are acting on behalf of the organization. Board members must put the interests of the nonprofit before any personal or professional concerns and avoid potential conflict of interest. This is big because if you're coming into a board meeting and you've got kind of your own agenda, whether it's personal or your own professional agenda, many times you're not going to be as effective. So that duty of loyalty means that you're there acting on behalf of the organization, that you need to kind of step back and say, what's in it for me or what's in it for the organization? That's that second D. And the last, what they call the 3Ds, is that duty of obedience. And all of this is going to kind of come back and talk about that financial side, which we're going to dive into. So what we're doing right now is more talking kind of more globally about overarching responsibility of board members. And that duty obedience is board members must ensure that the organization complies with all federal, state, local laws and regulation, and that it remains committed to its established mission. And this is something that a lot of times board members, maybe they don't want to get their hands messy, or they say, well, it's not my responsibility. It's really the executive directors or the staff's responsibility or the finance person. They're the ones that are supposed to submit the paperwork or whatever. But again, part of that obedience is making sure that you are complying with the laws and regulations of your state, of your community, of your county, and of course federally with the IRS regulations. I had somebody the other day that was telling me about all the bylaws they just recently changed, and I asked him a series of questions about the legal standpoint, and he had no idea that when you change your bylaws, you have to actually submit a new set of bylaws to the state. And so those are the kinds of examples that as a board member you need to be aware of. So in addition to legal responsibility, the board does act as a fiduciary role. And for me, that's probably going to be I think more of a priority and importance, hence the name of this webinar, which is that financial. So along with that, I want to kind of address, what most experts, and again, Board Source talks about this, Cal Nonprofits talks about this. There's a ton of others that talks about this, about sort of the basic responsibility of nonprofit boards. And again, with that, we are going to drill into the financial part. And again, just for those of you who have asked or going to ask, we will. I do provide for you a copy of all of these slides and share with those for you. So following this webinar, you'll get an email with a link to the recording as well as a copy of the slides. So I'm happy to share those. So what are the responsibilities of the board? Of course, determine and maintain the mission and purpose. So in other words, if you come on a board and the mission's already established, well, you're there to review that mission statement on a regular basis and articulate the organization's goals, means, and primary constituents served. It's funny to me the number of boards that either don't know the mission of the organization they serve on, or they don't spend any time reflecting and reviewing on that mission statement. And I always say, if you're going to make an important decision as a board member, one of the first things you want to do, read the mission statement and see if that decision fits in that mission statement. Of course, your job as a board is to not only select but also support the chief executive, whether that's an executive director, whether that's a CEO. If you're a church, that could be a pastor or a head of staff, somebody like that. So those 2 points, 2 and 3 are kind of together, which is as a board, your job is to not only select but also evaluate, and then even more so, make sure that he or she has the tools to be successful. So it's not just to hire and be their boss, but also to make sure that you're giving that head of the program the resources they need to be successful. Obviously, as a board, you want to ensure effective planning. You want to actively participate in overall planning, not micromanaging, but overall planning, vision, goals, kind of large overarching goals. Boards shouldn't be spending a lot of time micromanaging, how much was spent on, paper more as much as, is the organization meeting their objective as an organization. Obviously, monitor and strengthen programs and services would be along that. And then just 5 more, ensure adequate financial resources. That is a huge responsibility of the board. Not, why aren't you doing your job? Why don't we have money? But, helping come, problem solve in that area. I do believe that one of the board's foremost responsibilities is to ensure adequate resources for the organization to fulfill its mission. And so I think, that's something that, and we're going to talk about that a little bit. Obviously, you're there to protect the assets and provide the proper financial oversight, making sure that there's no funny business. And we see it all the time. We read about it in the paper where there's maybe fraud or a nonprofit has to shut its doors. And many times the board seems to kind of slip away and not take responsibility. So for those of you who are joining us today that are board members, yes, you are responsible for that fiduciary oversight of the nonprofit you represent. You're also responsible for building your own competent board and selecting board members that are there. They want to be part of those 3 Ds that we talked about, and also ensure legal and ethical integrity. And then lastly, your job is to enhance the public standing of your organization, ministry, or church, and that you should clearly articulate that mission to the public and to your coworkers out there. So those are kind of what I would say when people say, well, what do I do as a board member? I think you can use this in your own board meetings as well. So let me just pause really quick. I don't see any big questions coming in yet. So let's dive into a little bit, kind of the last sort of point I want to make, and then we're going to dive into some financial stuff. And I talked about this several months ago during one of my other webinars on something else. But I also believe that one of the important ingredients for success of a nonprofit board and the leadership is the relationship between the executive director, CEO, and that board, especially your board chair. And I cannot emphasize this enough. So many times, the stories I hear and the stories I read about when I talk to colleagues of mine who or friends who work in nonprofits, they talk about sort of the tension between the board and the executive director or the leader of the organization. And I really want to pause and just say, I think as a board, you should really reflect on what things can you do to build a better relationship, and I see, as you see here, a partnership, because the partnership should really exist between you as a board and that executive team, executive director, and the staff that's doing the work. And so if you're kind of in a situation right now where you're feeling like there's tension between your board and the leadership, then maybe reach out to me and I can maybe provide some alternative resources. Joan Gary, who is a fundraising expert, has a great book out right now. Again, if you Google Joan Gary, she's an excellent book about the relationship between the executive director and the board. So just kind of want to throw that in there. So let's talk about financial leadership. Again, as a board, this is something that you should be a part of, is providing that financial leadership. Of course, those key responsibilities is that hiring and firing and accountability that we talked about. commitment to the mission, that fiduciary oversight, and the legal. This is just kind of a recap. And then, with that, you want to ask the following question. Does the board know and understand the financial statements they are getting? I'm going to pause just for a second and just let you kind of read that yourself. Do you, as a board member, know and understand the financial statements that you're getting? And that's really what we want to kind of dive into a little bit. Again, I worked for a nonprofit here in the community that Aplos is located, and unfortunately, that nonprofit had to close. Luckily, I was not working for them when it did, and there was very sadly a huge public debate about what happened, and many of the board members did not even acknowledge that they knew they didn't even know that there was financial problems, and this was a very well-known public entity in our community, and they had to close, and it was very, very sad. So the question, I think, as you think about financial responsibilities of the board, is does the board and you as a board member understand the financial statements? So of those 10 kind of qualities that I talked about as board members, I want to focus the rest of our time on these three, which is ensure adequate financial resources, protect assets, and provide proper financial oversight. And how do you do that? You do that by understanding, first of all, what your finances are, what they look like, and how to interpret them. As we all know, that the larger the nonprofit, the more sometimes complex the finances might look, because as we all know, you're not selling, hamburgers and hot dogs. You're providing services, and with services comes a lot of complex financial situations, such as grants, such as restricted funds, such as unrestricted funds, such as what's our cost to do fundraising, how much do we pay our executive director, all those kind of conversations, and to put those in a report. The IRS will usually typically say that there's three of the most common type of financial statements for nonprofits. In other words, when you're being audited or somebody wants to know what your financial situation is as a nonprofit, they're going to ask for three types of financial statements. And those are going to be your statement of activities, also called your income and expense statement, your statement of cash flows, and your statement of financial position. These are three reports that if you as a board member don't know and understand, I'm going to really challenge and encourage you to learn and understand these three reports. I want to mention on the statement of activities, we're going to come back to this, but many times they call those a P&L. QuickBooks, who we are not, call those a P&L, which stands for profit and loss. And one of the things here at Aplos is we really kind of lean away from that language of profit and loss, because we really don't think in fundraiser, you're not doing profit and loss the same way a business is. Not to say that you don't have to have profits at the end of the year, but to say that a profit and loss really doesn't 100% represent what you do. In other words, with nonprofits, you're getting income, you're spending money, but you also have donations, and you have designated funds that you are putting into action, and sometimes that takes time. So these are three reports that I'm, again, just really want to encourage you to think about, and we're going to look at some of these in more detail here in the next few minutes as we kind of go along here. Here's some terms. I'm just going to kind of challenge you guys a little bit. Ask yourself, do you know what these terms are? I'm a really big believer in board trainings, board retreats, and one of the things I think you should do as a board and as an executive director of a board is provide financial training from time to time, even if it's once a year where you spend 30 minutes of the board meeting just doing some kind of basic finance 101 of the board. And that could include understanding some simple terms. These terms right here are some that we see every day here at Aplos when people call us, because we are a nonprofit accounting software. People call and they say, how do I track my assets? Where's my balance sheet? How do I get this particular thing on my balance sheet? What are my liabilities? How do my liabilities and my assets come together and play nicely together? Or how do they work together? A permanent restricted fund. So these are kind of common terms. There, of course, there's a lot more, but I just thought it'd be fun to kind of pull some out that you might want to ask, are these terms that you know and understand? And I think if you know and understand these, it will help you not only serve on the board, but it'll also help you in your decision-making process. So, for example, you're in a board meeting and your executive director comes and they ask you to maybe make a decision to invest in a brand new program. What questions are you going to ask other than, do we have the money? Because that can be a really broad question. Well, do you really have the money? Do you have the commitment? And so that's where you can start looking at things like, do we have designated funds? Do we have restricted funds? So in other words, some organizations have a lot of restricted funds and they're really they have a lot of cash in the bank on those restricted funds, but they can't spend them. So meanwhile, the general operating fund is down to zero. They can't pay their staff or they can't buy a new printer because all the money is stuck in restricted funds that they can't spend on anything. So those are kind of terms and questions that as a board member, you'll want to know and understand as you go. So just kind of an interesting thought with that. So let's do a little quiz. I'm going to kind of challenge you guys again. For those of you, again, about 60% of you on this webinar said that you are yourselves board members. So I'm going to ask you, can you yourself answer the following questions without flipping through a pile of paper or through notes? So if you just want to kind of read through those, I'll read them out loud too. But do you know what your organization's annual budget is? That's something that we ask a lot of customers that call. Do you know what your current sources of income are? And what the best mix of income of your organization. In other words, not everybody receives money from one source of donations. They might get grants. They might be fee for service. They might get reimbursed from the state. So what are the different sources of income and what percentage of that income? What are your largest expenses? What percentage of the budget do they consume? In other words, is 80% going to be administrative expenses? And that might not be a bad thing. Maybe you are an organization that without staff, the nonprofit doesn't work. But do you know that? What is your biggest financial risk? In other words, could one or two things happen today or tomorrow if you had to write a large check, could it be sort of the end of that nonprofit? How do you use financial management tools to measure your impact? In other words, do you guys have software and, are you able to track the cost per unit of service? Or if you're a client base, these are the kinds of things that you might want to ask. And if you yourself or your board members can answer these questions with confidence and clarity, then I say congratulations. If not, I'm going to suggest and recommend that you develop a training program to increase your what I'm going to call financial literacy for the rest of this webinar. And I think that this quiz would be a great way to start. So if you're kind of wondering, well, we've never really done a financial training for our board, I'm going to suggest and encourage you to maybe use this. You're welcome to have this. And as a starting point, and maybe do some financial literacy training. And that's really what we're talking about when I talk about how financially literate does your board understand some of those basic terms and understanding of how the money's coming and going in your organization. So with that, let's dive down a little deeper. Let me just pause for a second and see if there's any questions. So we have a question from Al, which is, we have learned from our previous mistakes and can repeat them precisely. You can repeat them precisely. I don't know if that's good or bad, but hopefully you are learning from your mistakes and hopefully you're improving on those, Al. So thank you for that comment. So let's go ahead and move here. So let's kind of dive into a few more terms that I think this is going to be part of that, financial literacy that I think if you yourselves don't know these, I want to encourage you. Cash basis versus accrual. This is a kind of a big accounting term. It can be kind of overwhelming, but the basic core of cash versus accrual is cash talks about revenue expenses that are not recognized until the money is exchanged. So how much cash do you have versus revenues and expenses that are recognized when an obligation is made. So it's the difference between billing somebody for services versus paying them right there on the spot. And this has to be kind of important because many times organizations, they want to, or CPAs want to know, is your report cash versus accrual? And it can be kind of an important deal. And I don't think you need to spend a lot of time on this particular one, but I just wanted to throw it out there because sometimes reports that you read could be on a cash basis versus accrual basis. And I think it's something that everyone should at least sort of know the basics of. And we can get more into that if you want. Another kind of term, a financial term that I think is important to kind of know and understand is an unaudited versus audited report. So in general, again, this is not always 100% the case, but for the most part, I'm going to say that an unaudited usually is a cash basis. It's prepared internally or through a bookkeeper. So organizations either have a volunteer that comes in and does the bookkeeping, or if you yourself are a bookkeeper for your organization, an accountant, they're prepared frequently, like monthly, quarterly. It's generally somebody that's prepared that internally for the board versus an audited statement is typically going to be prepared by a CPA, an outside firm. Some people are required to do this annually. Other people, it's more of a suggestion. We call it Pirates rules. This is not a rule, but more of a suggestion, if you get that. They're prepared yearly, and they have an auditor's opinion. So this is where an outside person is going to come in. They're going to look at everything, and they're going to say, this looks good. However, we might recommend you do the following 5 things, to comply better. State organizations, grant organizations have to have these, universities, hospitals, those kinds of things, nonprofits that have larger oversight or receive a lot of government dollars as well. But know what those terms are. So let's talk about financial statements a little bit. And when we're talking about financial statements, what are you looking for? Can you change from cash to accrual? You can change from cash to accrual. You just have to be careful about how you report it and when you report it. And I can get you some more detail on that. I have a short article, Roberta, on cash versus accrual and how that works. If you'd like, I'd like to send that to you. It's a good question. Whoops, let me go back to that. So let's talk about financial statements a little bit. In general, that's going to be your statement of activities. Is going to be your income statement. So when somebody says, "Well, what are your?" I need to see your statement of activities. What that is that's your income statement. What that does is that's going to measure the revenues against your expenses, or your revenues minus your expenses is going to equal your change in net assets, which is in a sense your net income. Again, that's what some people will call profit and loss. Here at Aplos, we call it income and expenses because really you're tracking 3 things in nonprofit world. You're tracking your income, you're tracking your expenses, but you're also tracking your designated funds. At the end of the day is how much you bring in against how much you spend. It is basic, but it is something you'll be amazed of how many board members don't really know what the statement of activities reflects. And we're going to show you some samples in just a couple of minutes. The statement of financial position, which is a little bit different, which is your balance sheet. So if you ever hear the term statement of financial position, what we're talking about here is your balance sheet. Your balance sheet is going to measure the assets against your liabilities and your net assets. So it's your assets and your liabilities, which is your net assets, and we also call those funds here at Apple. So your different buckets of money reflect your different program. It's basically how much you have in the bank, how much do you have designated to each one of these funds is your balance sheet. And that's very different than your income and expense statement. And then lastly is your statement of cash flows, and this is going to measure the changes in cash. And this happens because you might have a couple different bank accounts, money's coming and going, you're moving money from one account to another, you're spending money on services, you're buying things that donors have given you money for, and those kinds of things. So I think at the end, when all said and done, I think if you as a board member and your board can really interpret and understand these 3 kind of major statements, I think you're going to really find yourself in a great position, not only of your financial literacy, but then again, also in your ability to make decisions as a board. Because if you understand where the money's coming and going, then you can make a better decision down the road. Okay. So let's talk about statement activities a little bit. Your revenues, there are going to be different kinds of revenues, as you probably well know, but you'll just want to know, what are your service revenues? How much do you get in contributions? How much do you get in grants? And how much do you get in fundraising? And this is important to know, not only the different buckets or categories, but what percentage is coming from each one of those. Because again, if, say, for example, you're 90% grant funded, and I don't know, the federal government or the state government makes a decision, and you're going to lose 50% of that grant funding the next year, do you have the resources, the ability to to raise additional money through fundraising? Is this going to mean you're going to have to lay off some staff? I mean, those are decisions that a board's really going to have to think through and understand. Is there guaranteed? No, nothing's guaranteed, but you'll see the idea. And then, of course, your expenses, same idea, is that if you can break down your expenses and you can understand how much goes to program versus management versus fundraising, you'll have a better understanding of that. What this means, and sometimes program and management can sort of kind of bleed together a little bit. In other words, the reality is typically that means is a program is going to be the actual, doing the work. You're out there teaching kids how to read, an after school sports program, something like that. That's the staff that's out there actually what we call direct service, where management might be, somebody behind a desk that's, working with the board and making those decisions. And sometimes those are, people can do both of those. Sometimes money goes, where one person 30% of their time gets paid out of management and the rest in program, those kinds of things. And then fundraising expenses are very, very important. I'm not going to spend a lot of time today on that just for sake of time. But if you're spending, 90 cents to make a dollar, in other words, you're only making 10 cents on the dollar for a fundraiser, you might want to reevaluate that fundraiser. And that includes staff time. And that is something that I've talked about in some of my other webinars, that fundraisers, though they are very visibly appealing, sometimes they can be a real drainer on staff and staff time. By the time you add up the hours and hours, and in some cases people have to pay overtime or comp time, oh boy, it gets complicated, but you kind of get the drift on that. So these are on your statement activities, the different buckets that you'll want to understand as a board member. So some things to consider here is, as a board member, can you understand the trends for both revenues and expenses? Not only monthly, quarterly. Again, I don't know how often each of you boards meet. Some are monthly, some are quarterly. But the idea here is that can you look at trends and can you read that in a report? In other words, why is revenue so high this time of year versus another time of year? Did you know that somewhere between like 60 and 70% of the nonprofits in the United States raise more than 80% of their money in the last 2 months of the year? So let me repeat that. 60 to 70% of the nonprofits raise 80% or more of their money in November, December. So that's huge. So that means a huge influx of cash is coming in those 2 months. So that means in the late summer months, you probably might have to hold those expenses down a little bit, that kind of thing. Are there restrictions placed on revenues by donor or grantor? This is something you want to be really careful of, is how much control are donors having on what to spend it on? Or are they giving you money to keep the lights on? Or are they giving you money for a specific project, and do you have enough money to keep that project going? What's the relationship between fundraising revenues and fundraising expenses? I already kind of talked about that, but again, those dinner banquets are great, but if you're spending hours and hours and it's $30 a plate and you only charge $35, you're going to have a problem. And what are your largest expense categories? So these are things you want to look for in a report. So with that, I want to kind of talk a little bit about fund accounting, partly because this is what we do at Aplos. This is what we do well, but partly because even if you don't use Aplos, and even if you don't care to use Aplos, that's fine. But I really encourage you to look at doing more fund-like accounting for your nonprofit. And basically, what fund accounting is it's a method of accounting, if you don't know what it is, that illustrates accountability rather than profitability. In other words, if you're a business, we talked about this in the beginning, you want to know how much was spent, how much was earned, because at the end of the day, what was left over, some cases you give out in dividends, other cases you reinvest into that business. With a nonprofit, you want to know these things, but you also need to make sure that the money you have is spent for the allocated proper purpose. In other words, I'm a donor. I give you a check and I say, I want my check to make sure that I feed the homeless. Well, is that money really going to do that thing? So with fund accounting, what you have the ability to do is not only track those dollars based off the purpose that I'm giving my money to, but then when you run reports, which we're going to show you in a minute, you can actually see in real time what those different buckets are and how that money's being spent. So this would be something that, again, I would encourage you as a board member or as a nonprofit or as a church, whoever's listening, to really think through about how you're tracking your money, what software you're using to track your money. Again, Aplos is a fund accounting software. We'd love for you to check us out, but that's not the purpose here. There's others out there that might work for you. So with that, let's kind of show you some reports and challenge you a little bit more about, can you read some of these reports? So we're going to look at cash balance by fund. We're going to look at an income statement by fund, and we're going to look at a balance sheet. Those, remember a few minutes ago, were those three sort of major reports that I had said that if you can read these and your board can understand these, you're going to really come a long ways, especially in decision making. So this would be an example. And again, we're talking about fund accounting. So the funds are right up here at the top. You have your general fund, you have a missions fund, you have a building fund, you might have a after school reading fund, whatever. I just kind of threw that out as an example. So that what this represents the funds versus a lot of reports, everything's all kind of lumped in one bucket and you can't break them out. So your assets, of course, are what you own. Your checking, your savings, whatever petty cash, whatever things you have in the bank. That's money you have. And then so this is your balance sheet, and you can do it by fund. So this shows how much you have in each one of these. We'll call them buckets or envelopes. And this is where as fund accounting really gets good. So as a board member, you can look at a report and say, okay, look at how much we have in the general fund against, say, a building fund or something like that. And then you can look at your receivables, which is, what do you owe out there, or what are you expecting? I mean, not owe. And then what other assets you have. So this would be a really nice way to look at the different major projects or funds within your program or nonprofits that you're a part of. So that's one example. This would be a balance sheet, kind of simple, but also says a lot here. Again, a lot of nonprofits, they have a number of accounts. They might have multiple checking or savings account. You'll want to know as a board member how much cash do you have on hand. We're going to kind of talk about that in a couple more minutes as well. Whoops, sorry about that. As well as just a quick overview. And again, can you hand a balance sheet out to your board, and can each of them intelligently say, well, what is a fixed asset versus an accounts receivable, and are these terms that they understand? Again, remember, assets are things that you own, where liabilities are things that you owe, such as a credit card or payables out there. Like you might be making payments on you might be leasing a piece of equipment, or you might owe somebody for work that was done, such as a landscape architect or something in that term. And what are your long-term liabilities, like a loan? And so those are things that, as a board member, you can kind of look at balances and make projections so that you can make intelligent decisions at those different board meetings. Okay, this is kind of a two-pager, so I'm going to go to the second page of this. Which is, you can kind of see then from the top to bottom, then you get into your debt, you get into your restricted net assets, which is, again, those funds. And this is where a lot of nonprofits get kind of lost. So if you are representing, or you're on a board of a nonprofit, or you yourself are a director of a nonprofit, and you do major, different work, like different projects, then you want to consider what are the different, funds, and what are those balances. Okay, so that at the end of the day, you can see your total liabilities and your total equity, and what other people also will say is, what's your bottom line? Okay, so again, don't know if that's helpful, but again, this would be a report that I would challenge you to really encourage your boards to learn how to read and interpret. I didn't bring a sample, but I did hear the other day that I heard of a nonprofit that one of the things that they do is they actually give the 990, the IRS Form 990, which is what every nonprofit has to file each year. They actually give this person that told me this said that they give the 990 of their organization to the board, and they have them kind of go through it and read it so that they can interpret it themselves. In other words, it's an exercise to read the 990. This would be an income statement. So again, what you're looking at here is you're looking at your income. And you remember we talked about those different ways of income. This says tithe income, but this could say donation income. You see here in this case, you've got general income, you've got merchandise income. So you have your different buckets of money and how it's coming in. So with fund accounting, what you're able to do is track those various ways of income. So maybe your organization and you've got kids that make art, and then you go out and you sell that art. Maybe that's merchandise income, or maybe you have a coffee cart, or you sell something, or you have grants against donations, or those are the different kinds of income that you can track. And then you have your expenses based off each particular item. These numbers right here, these are Aplos. We follow the GAAP standards, which is general accepted accounting practices. But again, the idea here is now you can see how much we paid for administration versus utilities versus, other kinds of things. And that's where I think as a good accounting practice, if you have a report that's you understand and read, then when you go to make a decision, you can look at some of these numbers and say, well, gosh, why is our payroll so high or low, or are we okay? Kind of thing. How much did we spend on this fundraiser? One thing you want to also know is that on events, you want to make sure that you're making a decision if you're reporting net versus gross, meaning did we bring in $100,000 on that fundraiser? How much of that was net? In other words, after we pay the caterer and the rentals and the all the stuff, how much do we have for the nonprofit? And in some cases, the staff time. So that's your income statement. Understanding how much is brought in, how much we're spending for your total income or loss. In this case, this is income of $42,000. Okay, let me pause here. Good. All right. And so along with that, another way to look at this, you can do it by month. This would be a report. This is a report you can get in Aplos. It's an income statement by month. The same idea is there. You have your general income, your merchandise income, but then you can do it by month, so that, or you can do it by quarter. And these are different ways in which reports can get run that can be understood easily. So again, you can kind of track and see trends, ups and downs, and maybe highlight if you see a big influx somewhere. You might kind of drill down and say, well, why did we get so much? Oh, look, we got a giant donation that month, or an unusual expense or something like that. Again, all of this is so you as a board member can make an intelligent decision for the nonprofit that you represent. Okay, let me just pause and see if there's any questions on that. There is not. So let's keep going. So we have time for some Q&A. And then you can also do a comparative. So in this particular report, what you're doing is instead of the funds, what you're doing is you're looking at on very specifically how much did we spend on administration, how much did we spend on marketing, how much did we spend on outreach. So a different way to get to the same result, which is, again, you're looking at your income, you're looking at your merchandise or whatever, and then you can then break it down by those different subgroups of the different types of staff that you have for that nonprofit. Some other details you need to know so that you can have a realistic understanding of your finances. And again, this would be a checklist that I would suggest and recommend each of you as a board member take or share with your board. Al, I'll come back to your question here. It's a great question. So first of all, monthly budget. Can you do a cash forecast? Do you understand how much, not only what your annual budget is, but what's your monthly budget? Because again, we talked about those. You have nonprofits, for example. my wife, as an example, works for a children's choir. Their budget is very thin in the summer because the kids don't rehearse and perform in the summer. They take the summer off. So they hold their expenses back. They don't spend much money. They don't pay their directors year round. They pay them, based off the school year kind of thing. Do you have a plan for big expenses? That's something that a financial decision that your board needs to know. Are you squirreling money away? Are you saving money for a new piece of equipment or a new, a building upgrade or something like that? What percentage of your organization is being funded by just a few people? This is really important to look at your donor list, that 80-20, 90-10 rule, and can you kind of stretch that out a little bit more? Meaning that if that donor went away or those few donors got mad and left, what would happen? What is your restricted versus unrestricted balances? Again, restricted versus unrestricted is unrestricted means you can spend money on whatever, from the lights to the staff, versus restricted is when donor says, I want this spent on a particular thing. And you have to be really, really careful with that. Example for me is I was on the board of a camp. The camp wanted to do some upgrades on a series of cabins. So what they did is they created a restricted fund for cabins. The problem was you couldn't spend any of the money until all the money was raised for those cabins. So they ended up spending, and the fundraising took longer than they expected. So they sat on a lot of money for 2 to 3 years before they could spend it because they didn't raise all the money they needed to build those actual cabins. So there's an example where they had a lot of cash on hand, but they couldn't spend it, if that makes sense. So do you have a rainy day fund? What's your budget to actual? Do you have quick access to your finances and ability to run reports? And then lastly, your insurance, know and understand your director and officer insurance. Okay. So that's kind of the, kind of overview. And if you are a board member, hopefully you can take some of this stuff to your boards and do some additional financial literacy with your own boards.